Assalamu alaikum and welcome to the Oasis Focus and Finance Show. I'm your host, Shafiq Morton, and as always, it's great to be with you. In today's show, we're going to have a look at pertinent issues surrounding global investment. And in today's show, we're going to be looking at certain general questions surrounding something called global investment diversification. Next week, inshallah, we'll have a look at the specifics, how you yourself can indulge in global investment. But joining me in studio today from the Oasis team is Hassan, Motala, investment analyst, and Mansoor from the wealth management team. Gentlemen, assalamu alaikum.
Wa alaikum assalam.
Mansoor, let's get down to basics. What do we mean by global investment? Big term.
In general sense, global investment is as a result of you allocating funds directly or indirectly into various asset classes with no geographic ties back to your own country of residence. This process of taking money abroad also gives you access to the likes of products or services that you might possibly not find in the investment industry in your current country or in the country you reside in. In addition, usually the investments are denominated with foreign currency in the form of dollars, pounds or euros.
Hassan, what would be a possible reason for me to want to indulge in global investment?
I think, Shafiq, it's you started off with one of the words in your one of your sentences, diversification. Many of us, we brought up with the term that comes out, don't put all your eggs in one basket. Now, diversification is part of that. Remember, a big part of our assets, be it our home, our, a lot of our savings and the like, the money we earn is generated in South Africa. So our home is based here. We may have other property that we may have here. A big part of our assets is sitting in South Africa. But it's important as an individual and as a family or as that we make sure that we have some form of diversification also outside of the country we live in. And why is it important? Giving the example that you just had recently, look, December was a very tough month. It was those events that took place which obviously highlighted the need for diversification. We saw in the space of like a few days, in the space of like about 2 or 3 days, where our currency depreciated very significantly. Our equity markets came under pressure. Our bond markets came under pressure within a space of 2 to 3 days. So it's not a period of in a short space of time, impacting very significantly, very negatively, that can have an impact. But if you are diversified outside of South Africa, your portfolio actually would have had some benefit from those events that had taken place during December. And why is that the case? So Mansoor highlighted earlier that being diversified outside of the country also implies that you invested in certain other currencies. So some of your portfolio may be in pounds, euros, dollars. Now, diversification takes forms in various manners. And I'll try and sort of delve into each one of them. Firstly, geographic diversification. That's easy. You're living in South Africa, a big part of your assets are here. How do I diversify out of South Africa? So geographically, means, for example, getting exposure to the developed markets. So be it the US, the UK, Europe, those countries. And also some people may say, okay, maybe some diversification into other major emerging markets. But largely we focus on saying, for example, in our global funds, we have mainly exposure to the large developed markets of the world. So that gives you why it's important as well. If you look at the world globally at this point in time, emerging markets are facing pressure, while the developed markets are actually doing relatively well. The US is growing relatively decently, UK is growing relatively okay, Europe is slowly starting to recover from its slumber. So you're seeing the developed markets, that's why it's important to benefit from that. While we may be facing challenges, your portfolio is benefiting from the growth in those economies there. Secondly, the currency factor, Mansoor highlighted. If you look at what our currency did against the US dollar, against the euro, against the pound during that period, if you had diversification in those currencies, you would have benefited from that. And therefore it's important to have that currency diversification across your portfolio. Third area, what it implies is this here. For example, within South Africa, we will have diversification across asset classes. And asset classes, I mean your equity, your property, your income. But globally, it's important also to have that diversification from an asset class perspective, equity. For example, in the global market, we have a fantastically well-developed Islamic bond market, or sukuk market as we call it. South Africa, it's still in its early stages. The South African government only issued a sukuk, in the last 2 years. Not really, and it's a market that will only is still slowly developing over time. Globally, that market is developed. Be it a Turkish sukuk, a Malaysian sukuk, a sukuk from the UAE government or the Dubai government. There's many sukuks out there by the sovereigns and the corporates in the global context. You can benefit from that. So that's where the asset class diversification across, because you're benefiting firstly from those well-developed asset classes globally. The fourth area is from a sector perspective. And why I highlight sector, and it's important to put that into perspective as well. If we look at the South African market, we've got a relatively well-developed South African, if you look at our South African exchange, well-developed market and reasonably well-diversified from a sector perspective. However, there are certain sectors where we don't have a strong presence from a global perspective. And I'll use just one example, the technology sector. Can we truly say our sector is really well-developed, technology is well-developed and has big brand names that can compete globally? I can't think of many.
Similarly, your pharmaceutical sector, we do have one, but very small in comparison to the developed world.
Exactly. So technology, healthcare. Technology, I mean, here you got the opportunity then to invest in the great technology companies globally, the likes of Apple, the likes of Microsoft. Great, these are world-class great companies and sectors where you can get exposure to, and companies you can get exposure to, which you may not get the opportunity within the South African market. So sector, and then I've broken it down further, the fifth part being from a company specific perspective, where the likes of investing in a Microsoft and an Apple, which you don't get the opportunity. So that's where the diversification is important from a global perspective. And therefore it's important that investors, not to put all the eggs in one basket, take the opportunity that, yes, I can diversify globally, ensure that you do that, because from a longer term perspective, it holds you and your portfolio in very good stead over the longer term.
Now, Mansoor, Hassan has mentioned geography, he's mentioned currency, product and sector, correct. But I'm sure to do all of this, there has to be a process. So how do we understand that part?
Investing globally, Shafiq, there's two ways of doing that. The one would obviously be direct global investment and indirect global investment. Maybe to look at direct global investment, the first thing one needs to identify, Shafiq, is that you will have to be putting your money into a financial entity outside of the country. So my advice there is to look at a reputable company, somebody that has built a trust for you as an investor. The worst thing you can do is go put it into a financial service entity that is unscrupulous, and you find that you are having to struggle to actually get your money back one day when you do want that money. So firstly, it's identifying the financial service provider that you're comfortable, trust and want to invest in. Then obviously discussing with your financial advisor, where he will make a recommendation based on a needs analysis, your current financial situation, looking at your current financial situation as well as your appetite for risk, and choose an appropriate global investment that suits your needs and for your objectives, Shafiq. Once that is done, the first thing the individual would have to do is apply for a tax clearance certificate from the South African Reserve Bank, because he's taking money directly offshore. Your current limit is 10 million rand per annum that you're allowed to apply for clearance offshore. There's another R1 million discretionary allowance which you could also apply for when you're taking money directly offshore. Once that is completed, the financial advisor will complete the investment forms with you. You'll provide the tax clearance certificate to your banking institution, give them the payment routing instructions as to where they need to pay that money so that it reaches the offshore financial service provider. The financial advisor will then ensure that your money is invested, you will get confirmation of that investment, and then obviously review the performance of that investment over time, Shafiq.
Now, Mansoor, just to seal off this first part of the show, you mentioned the word South African Revenue Services. if I want to invest globally, do I have to go through SARS?
If you want to go directly offshore, then yes, we would have to apply for the tax clearance certificate from SARS. There is a means of getting offshore exposure without having to apply for tax clearance, but I'll be covering that a bit later in the show, Shafiq.
We were talking about certain allowances in terms of global investment. Just run through it very quickly again.
Obviously, just to recap, and obviously just to expand on what Mansoor highlighted earlier. Firstly, remember what he talked about earlier was going directly offshore. So in that case, we obviously given certain allowances. There's two important parts. Firstly, every year any individual is given R1 million allowance. So that means, for example, if you're traveling offshore and you're utilizing it for spending or whatever it may be, it's R1 million allowance. You can do with it what you please.
So Hassan, that's your discretionary allowance. Correct. And you don't need to apply for clearance for that.
Exactly.
So any individual can use that for...
Right.
Exactly. So that's R1 million. Then you're given a R10 million allowance. Now here there's obviously a process where you obviously will have to apply to SARS. Now it's split in two ways. So up to firstly up to 4 million rands, there is a relatively short process where you can, within 3 to 5 working days, you can get clearance from SARS in terms of applying up to that 4 million rands where you can get that. However, after that, where going up towards the 10 million after that, then there's a bit of a more detailed, longer process because SARS then is required to do an audit and the process tends to be longer. It could be, sometimes can be 8 to 10 weeks. So that tends to be a bit more longer because of the process around the audit, verification, all of those issues. It does take a bit longer. So the easiest and quick, your 1 million rands, discretionary, you utilize it. Up to 4 million, you're getting that allowances where 3 to 5 days, you get the clearance, you can do that very quickly. So that's directly offshore.
Mansoor, we've been talking about global investment, but you've mentioned briefly there are investment options. Can you just take us through perhaps some more detail with regards to this?
Up until now, we basically spoke about direct global investment. It's where an individual converted his rands into dollars, invested in hard currencies. For the individual that wants global exposure, but not wanting to go through, call it the red tape of having to apply for clearance, take money directly offshore, he's got the option of investing into a feeder fund, which is a collective investment scheme governed by South African rules and laws, but giving you offshore exposure. So the underlying investment of that feeder fund would be a dollar-based or pound-based or euro-based global investment. The difference between the two is, if I look at it from a direct global investment, the currency plays an important role on the day you're converting your rands into dollars and the day you bring that money back, if ever you do bring that money back, that's when the currency plays an important role. With the feeder fund, the currency will come through on a daily basis, basically, the impact of the currency. If the rand softens by 10 to 15% over a month, you'll see the value of your investment increase because of the currency profit that you're seeing in the investment. Similarly, if the rand were to strengthen, you'll see a decline in your investment over that period to the same value, basically. For me, a key factor or difference between direct global investment and your international feeder fund, Shafiq, is with the direct global investment, there's a bit more red tape, having to apply for clearance to take money offshore. Whereas for that individual that wants offshore exposure and doesn't want to go through all of the rigmarole of applying for tax clearance, a feeder fund is an ideal way for him to get offshore exposure very easily because your money is getting the offshore exposure where the fund is using its offshore allowance to take that money abroad for you.
Right, Hassan, the finance minister mentioned the word amnesty during his budget speech, particularly in connection with global investments. What was he really talking about?
I think, obviously we've had it previously as well. And, the minister did give, I think, we've had previously where we've also had amnesties being provided to those people that, over the years, they may not have declared money, either that they had earned offshore or that they had taken offshore, over the years as well. So what the minister is essentially saying is that they're giving a period. It's going to be a short window. So it's from the 1st of October 2016 to 31 March 2017. So they're giving a period of 6 months where they're giving those that have already money offshore or they're earning money from offshore, they're saying, come clean. Tell us about it. This is an opportunity we're giving where, we're not going to knock you over the knuckles because we're telling you come offshore. Yes, you're going to have to pay a small penalty and you're going to have to pay some tax related to that money. But this is an opportunity to come clean so you don't face any criminal or other related charges later on if it is found that you do have money offshore and you haven't declared it. So it's a great opportunity for those, people that do have money offshore, be it, assets that they've earned over the years or that they're taken offshore, to come clean and say, look, this is what I do have, be it in, in the UK or Dubai or wherever it may be. Say, this is what I do have, this is how much I have. Obviously working with your advisors and obviously you'll have to work with the likes of the authorities in South Africa to obviously go through that process and making sure that you're addressing the requirements related to that. Now obviously, as I said, it's a period of 6 months. There is certain penalties. For example, I think they've highlighted that if you do decide to bring the money back to South Africa, there will be a 5% penalty levied. If you do decide to keep the money offshore, then they're talking about a 10% penalty. But then also there's other certain points such as, depending when that money was taken offshore and the like, there could be certain implications in terms of be it taxable income and how much of it will be included. So that's why I said you will have to obviously speak with your financial advisors and the like to understand the impact on your specific requirements when you had taken the money offshore, how much and the like, so you get a feel in terms of what the implications are and the like. There's an opportunity if you come clean that you have the opportunity to invest in high quality products. Be it, for example, the Oasis products that in the UK or Dublin and the like. High quality products where you can generate very decent returns over the long term, and you can sleep peacefully at night knowing that your money is being well looked after offshore, not worried, hey, you know what, I've got it there, but I've got it to this certain shady character who I've took it offshore and I'm not sure how am I going to get it back, or if something happens to me, how will my family get it back? Here you can sleep peacefully that it's in a regulated, transparent investment offshore. You've come clean, you know about it, your family knows about it, the authorities know about it. If something happens to you, you know that your family can access it and will be looked after over time.
Now, when we talk about global investment, obviously for it to be successful, there's an element of competitiveness, and you've already started touching on some of the Oasis products. I do believe that in terms of competitiveness, the company's done quite well.
Alhamdulillah, on the global side, we've actually had managing money for over 16 years. Very importantly, if you look at the track record of many of our global funds, they've competed very, very effectively against many of the global competitors out there. And I'll give you examples. For example, on the Global Equity Fund, the Crescent Global Equity Fund, this fund has now just under 16 years of a track record. It's outperformed global markets such as the MSCI World, the Dow Jones Islamic Index, and it's outperformed its peer group over that period of time. And it's outperformed it by a large measure. Secondly, we've got other funds such as the Global Property Fund. It was actually the first of its kind globally. The first Sharia-compliant global equity fund in the world when it came out. It competes very effectively against other global property funds out there as well. You highlighted, for example, how do we compete and have we received any accolades in that regard. Very, very recently, one of the premier global providers or data providers in the world, Lipper, Thomson Reuters, they're really premier in terms of looking at funds globally and from a performance perspective, doing analysis on the funds and the like. Our Oasis Crescent Global Low Equity Balance Fund received the award for the best fund over 3 years in a mixed asset class. And this is not just competing in the Sharia space. This is competing against all global mixed asset class or balance funds in the world and receiving the best fund over 3 years. Now that means you're competing against people in Switzerland, against people or companies in the UK, in the US, globally. And that's important. And we are really proud of that accolade in terms of from here delivering great global products through our global partner in Ireland, ensuring that we're providing and addressing the needs of our clients out there. Alhamdulillah, we also received, I think it was just about a week ago or so, there was the Islamic Finance News Awards. And I highlighted earlier that our global property fund, this global property fund as well, received the best global property fund globally obviously in the Sharia space. But it's highlighting the point that across our product ranges, on the global side, you're giving quality products that are transparent, that are regulated. They're regulated by the Irish regulator. In the UK, they're regulated by the FCA. They're regulated. Obviously, also by, the funds that are registered in South Africa, they're regulated by the South African authorities. These are regulated, transparent, high-quality products which are competing very effectively globally, and our clients in South Africa can access them very effectively.
In fact, Mansoor, just to expand on the whole issue of accessing funds, how easy is this or how difficult is this? What's the answer?
I think the first thing is the client needs to decide whether he's going to do a direct global investment or indirect global investment. And let's assume he's doing a direct global investment. I think the very first thing is to identify the financial service provider which you have got trust in and you're comfortable putting your hard-earned wealth with. Similarly, you would need a financial advisor to guide you to make sure that you're going in the appropriate product based on your age, your risk profile, and your financial circumstances. Like Hassan mentioned, on the global side, we've got from a pure equity fund to a global property fund, global medium equity, global low equity, and even a global cash account, global income fund. So that's his job to guide you as to which product suits the objective and why you're wanting to put that money away. And then lastly is also for him to walk you through the tax implications that would come with you going directly offshore, how that would impact your personal tax in South Africa. With regard to all of those South Africans that are living abroad, ideal place for them to park their money. They accumulating wealth in dollars, in pounds, dirhams, but it's sitting in their normal bank accounts. They're not going to use that money in the next 3 to 5 years. We're offering phenomenal products for them to look at and park that money up until the day they actually need it, whether it's to buy a home or when they're returning back home to South Africa for that matter.
So I think those of you out there, obviously the viewers out there that have family, friends that are working in the UK, that are working in Dubai or working offshore and want to save and do it in a manner which is firstly Sharia compliant, but very importantly ensuring that you're growing your wealth in real terms, beating inflation from a long-term perspective. There's a fantastic product range out there. Please, we're across the road from Harrods, or just opposite Harrods. So come to our offices in Knightsbridge in London. Or, you can obviously contact, if you do any further details, more than welcome to contact our offices in South Africa. But those of you that have the family out there, tell them, visit us in our offices in Knightsbridge, across the road from Harrods. Come and have a cup of tea there and let us assist you in growing your wealth. You're working hard overseas. Make sure that the wealth that you're generating in the countries that you're working in, that it grows longer term so that you and your families can benefit from it.
Hassan, Motala, Mansoor, Mia, thanks for chatting to us about global investment.
Thank you, Shafiq.
Assalamu alaikum.
And that concludes this week's edition of Focus on Finance, talking about global investment diversification. Our special guests were Hassan, Motala and Mansoor Mia from the Wealth Management team. Should you wish to watch any further shows or ones that you've missed, you can tune into the Oasis Crescent YouTube channel. Should you wish to contact the company, 0860 100 786 or info@oasiscrescent.com. Until next time, I'm Shafiq Morton. Assalamu alaikum wa rahmatullah.